investors and corporate, welcome to SET Digital Roadshow Third Quarter 2023 Performance Review. This section will run about 45 minutes, including Q&A. Company will start the section by 30-minute presentation, followed by 15-minute Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the questions to the company directly. So may I now invite TPI POLENE Public Company Limited to start the presentation, please. Thank you very much.
Good morning, everyone, and thank you for joining in this digital roadshow presentation. My name is Maria. I am the head of the corporate relations of TPI POLENE. I would like to start the presentation. If you have any questions, don't hesitate to send your questions through the chat box, or later on, just open your mic and ask a question. So TPI POLENE is an industrial conglomerate, and we have 4 divisions. The largest is construction, but actually the group started as petrochemicals, as everyone knows. We lost the largest asset back in the 1997 financial crisis, and now the largest division is construction. We also have energy utilities, and this is primarily renewable energy, basically using household garbage as the input. And from our energy and garbage processing, we have a new, relatively new division called agriculture and healthcare. It includes products that we derive from the byproduct of the handling of the garbage. So here are our key assets. In the construction material space, we are the 3rd largest in terms of cement capacity, and that is because our competitors, Siam Cement and Siam CT, their total capacity includes investments outside Thailand, whereas for TPI POLENE, we are totally Thailand-based. So if we look at capacity in terms of market in Thailand, we are actually the 2nd, and our utilization rate is up, exceeds 90%. We also have mortar, and we are the largest in this one, both in capacity and in market share. And we have ready-mix concrete and lightweight concrete. We are quite proud to announce that we just received patents from the US for an innovative lightweight concrete product. So we hope that this will help us push the product into the global market. We have also all the other types of construction materials that is allied to cement. In June this year, we launched what we call green cement and building materials. And this is basically our attempt to make our cement product more environmentally friendly. What is that exactly? It circles around the content, the clinker content of the cement product, trying to reduce the clinker content, because in the cement production, clinker is the most environmentally dirty, if we can call it that. Our specialty polymer, we started with petrochemical industry, everyone knows and everyone remembers, and we have been whittled down to just specialty polymer, but we are also quite proud to identify ourselves as one of the best in EVA emulsion production. In terms of size, it's 158,000 tons. Doesn't look very big compared to our chemical friends who have 2 million, 3 million tons capacity, but within the EVA space, this capacity is considered middle size. And then our power, this is TPI POLENE power listed. We now have 440 megawatts, and currently we are modifying our 150 megawatt remaining coal-fired power plant, and we hope to complete this by 2026. Okay, so continuing, sorry about that. Continuing, in here you can see that there is 220 megawatts of coal-fired power plants. This includes 70 megawatts, which is a hybrid power plant, which we modified since last year and was completed in April this year. So the plant is starting to run. Not yet 100% optimal, but getting up to the learning curve after conversion from coal to MSW. So right now, on balance, is just 150 megawatts for modification from coal to MSW, as I mentioned earlier. We also have new projects in MSW located in the provinces, one in the south and another one in the northeast, and we just been recently identified as the best bid for another one in northeast, but it's not yet concluded. We are working on a solar farm and a wind farm. These two projects, renewables, are located in Saraburi, and this will supply to our mother company that is currently buying some of its electricity requirements from the national grid. We have a pending project in the south. It's called the Chana Industrial Estate, and this is waiting for all the rest of the permits. It's been frozen for about 3 years now, and hopefully now with the interest on the track land bridge that is being talked about in the press, maybe this project can move forward later on. So these are our products, and we have over 5,000 SKUs. We haven't done any culling yet, but when we finish our modification program, we will embark on culling or rationalizing our SKUs. So one of the things that we would like to highlight to you is our innovative culture. In this particular page, you can see where we are the first and the best in terms of product categories. And this is not quite recognized by the market, so we would like to present this to the investors and highlight it every time we get a chance. This is what I mentioned earlier on in the lightweight fiber cement. We received a patent for a different product, whereby the quality of the fiber cement is just enhanced, and it becomes a very desired substitute to the concrete and also to the wood kind of walling and flooring materials, especially that wood now is becoming more scarce. And according to latest research by Industry ARC, the growth for the fiber cement market is expected to be around 6.2% per annum. And so we hope with our new product, we hope to cash into this stronger growth pattern compared to the cement. This is our performance in terms of margin and how we are positioned compared to our peers. In the construction material, we are between the first player and the second player, and we have been closing the gap from the first player in some quarters. And so I think we are doing the right thing in that one. In terms of petrochemical, you can see this is the largest. Their margin, EBITDA margin in the third quarter was just 5%, and the second player 10%. And here the third player is a specialty polymer based on PE. The margin was 18%, and our margin was 28%. Throughout the periods shown here, we have been achieving higher margin, and that is a testament of what we call real high value added. When you look at the chart here, this is the spread of the product, and you can see the HDPE, LDPE, their spread is really it's negative, right? Almost negative right now. Whereas even for our spread that have also declined, like every other polymer in the market, it's still able to generate spread enough for conversion cost. So we remain profitable in this particular product. And all of these advantages, performance-wise, are really not captured, because when you look at our valuation, we are among the cheapest among local peers. And in the case of TPI POLENE, for example, our PE is just slightly higher than the yield that we offer. So this is our performance in the 9 months and in the third quarter. In the 9 months, our EBITDA is about 24.2%. But you can see in here that by third quarter, EBITDA was 27.5%. The reason why, because in the first quarter, we hit a what you call a historic low relative to the performance period from 2020. So quarter-on-quarter basis, our EBITDA has been improving despite the fact that the demand conditions are really lackluster. Thankfully, pricing is holding up very well in the building materials, while it is not, and that is compensating the weak petrochemical prices and spreads. So this is what we are in terms of sales. Construction material generates 56% of total, specialty is 25%, and energy and utilities is 18%. And the growth for the sales top line was 10%, a negative 10%. And this is our EBITDA. You see, construction material is 56% of sales, but in terms of EBITDA generation is only 26%. The best EBITDA generator for this year is the energy and utilities. Interestingly, if you track us, if you've been tracking us since last year our best EBITDA was derived from specialty chemical. So it does look like we have some sort of offsetting divisions that can allow us to deliver a reasonably resilient EBITDA profile. Now, this is our assets. Most of our assets are also in the construction material and then in the energy. Our specialty polymer asset base is very, very low right now. So you can see when you look at EBITDA on assets, this is the best performing division for the company. Now, in terms of investment, you can see that the construction material division and energy and utilities are having increased capex this year. And that is because we are modifying our plant to make it more green or to reduce the carbon emission, and as well as produce new products that will jive with an environmentally friendly agenda. This year will be our peak capex year. So just a bit of details on what happened in the third quarter. So our volume sales rose by 4%, but price was a bit lower. So that's why you have a lower performance. Prices in the cement specifically is quite stable, but the export market prices was very low because of competition and some dumping from other countries that are also exporting their cement product. Our EBITDA improvement in cement was mainly due to the reduction in the energy cost. As you very well know, energy is almost 50% of the total production cost. Our EBA was lower in volume terms and very sluggish. Back when everyone was looking at the global recovery, we were also optimistic that the EVA prices would hold up, particularly EVA used in the solar panel production, but that hasn't been the case. And right now, the outlook for the fourth quarter is decidedly lackluster. In terms of energy, last year was a difficult year for us. We had shutdowns and then we also had expiry on our pricing contract for 2 power plants. The the other component of the prices were matured. So it was tough. But this year, as I mentioned, we completed the modification of TG7, and then we also do better in terms of operating rate. So that is why we can see better performance from our power. But our power faces headwinds arising primarily in the FT element of the power tariff. As you can see, the government has been reducing FT sequentially since the beginning of this year. And this reduction of FT actually is not a reflection of the gas cost that is the basis of the FT. This is more about the social agenda of the new government. So this is how we look in terms of prices for our power. This SPP here is the price that we sell to IGAS, and IPS here is the price that we sell to our mother company. These two prices here, SPP1, SPP2, is almost similar to the power we sell to our mother company because there is no longer another element into the pricing. We just have one power plant that has an other, and this other will expire in 2025. So October to December, you already know the price of the electricity. Is there hope for the price of electricity to go up? Yeah, the other day, the Energy Commission has approved an increase on FT that will take the base price of electricity in total up by about 7 or more than 10%. But of course, today you will also see in the news that the Prime Minister is surprised about the rate of the increase. So we have to wait and see, but the direction is up. So this is just another presentation of how we are doing. As you can see, construction material is a very difficult business, volatile in margin, but since the first quarter of this year, we've been doing well in a sense that we are managing to increase our EBITDA margin. And we would like to keep this. There are two drivers. First of all is the energy cost, but the second driver here is the cost efficiency programs that we have been doing, and also the launch of the green cement product whereby the clinker content is lower and the margin is better. What efficiency program we are doing? The biggest example is that in our clinker production facility, we switch from coal to MSW, and we can run that clinker facility on a 25% MSW maximum. So specialty polymer, this is you can see that back in third quarter 2020, the average EBITDA margin, the average EBITDA margin was actually very low. We hope that we can hold on to this level. It looks like we can hold on to this level, but we really cannot tell. Petrochemical is a very difficult product to handle. Energy and utilities, we are quite confident that our margin will continue to improve as we get our TG7 at a better operating rate. So this is the look of the margin of the group. As you can see, it reflects more on what is happening in the construction materials rather than in other divisions. And this is our leverage. This is quite, some people would say that this is not an ideal capital structure because right now we sit on a 13 billion cash or financial assets, and that is equivalent to 29% of our sales. Typically, cash relative to operating activity is just about 5 to 7%. But the reason for this high cash balance that we are sitting on is that our management believes that the financial conditions could become more difficult next year. And we don't want to sacrifice our capex and project completion. So we are de-risking our capex by sitting on a significant amount of cash. So we are negative carry at around 3 percentage points. If the financial conditions start to improve, then we can easily use this cash to repay our debt. Our funding cost right now is about 4%. Beginning of this year, we got upgraded to A- for the first time in our history. So in our working capital also, you can see quite long, about 150 days by the end of third quarter. The reason for this is that the inventory contains a significant amount of spare parts related to our CapEx and plant modification program. So what is the outlook? Construction materials local is quite lackluster. The formation of the government is slow, and the approval of the national budget also been delayed, and that results in stagnation of government projects. You can cross-check us on this one by looking at what's happening in the payables and receivables of the contractors in Thailand. Gross capital formation has been very, very depressed in this country, and that doesn't bode very well for the cement volume sales. Economic recovery in Vietnam and China has been slow, and so these two countries drag the regional cement price, and that's why our export has been quite sluggish, because we didn't want to sell at a very low price. The upside is that energy costs look favorable. EVA, as I mentioned earlier, is decidedly lackluster also. Typically, fourth quarter is a high season for manufacturing, but the slowdown in the solar panel production has been the drag on the EVA demand. Energy, we only have PG8 that is under modification program, and this is divided into 3 phases and expected to conclude by the end of 2025. So this is the economic look of Thailand, very depressed, particularly on the gross fixed capital formation, has been negative. Construction just managed to deliver slight growth. So it's among the ASEAN countries, this is the one that does not look too good. So we would be relying on the overseas market going forward. Energy prices, this is a coal. The last price is November. It's still on the way down, which is quite odd, because typically we would have a high price around this month in preparation for the winter. Gas, the EU gas prices are recovering now, and that is why FT has a likelihood to go higher than lower, because the gas pool price is based on EGAT's production cost, and that is anchored on natural gas from the EU market. This is our power production. We actually, in the second quarter, we expected to be about 500 million units, but because our TG7 had a hiccup in September, that's why we are lower. And this is the FT adjustment that has been under discussion, and ARC said that it will be 0.69 baht per unit, but the Prime Minister today said that would give a too high electricity cost. So cement, unlikely, the price of cement will remain stable, unlikely to go down because of the still high energy cost. Petrochemicals, yeah, you can see that the demand for hot milk, which is used in packaging, and also for the footwear, which is indicative of manufacturing, is actually doing well. But the solar panel production was bad. That's why you can see compression in the spread in the EVA, because the raw material also was higher, unfortunately. What is our leading indicator for the manufacturing activity is the PMI, and you can see literally the big markets are on the bordering on the contraction mode, so nothing to look forward in terms of plastic demand. This is us. In the year to date, our high value added was 78% of total EVA of specialty polymer sale. The reason for this is that there was a shutdown in our supplier in the first quarter. So we could not make a lot of the EVA, HVA, but it's back to normal. So our petrochemical division is largely SBA driven. And this is just a repeat of the spread. Okay, guidance. Beginning of the year, we said we might achieve 13.3 billion EBITDA, but because of what has happened since then, we are revising our guidance to 10 to 11 billion. So a little bit lower than expected, but it's still okay relative to our history. And with our revised guidance, the 9 months accounts for 72%. This is our CapEx. You can see 9 months, we have 7.3 billion deployed and 61% of that is in the power. Fourth quarter is probably gonna be in the power division. And this is our modification program. Just don't get confused on the plans, but on the arrangement of the timeline. So for those who are interested to run the numbers, you can just divide 150 into 3 phases. And these are our new projects. So sustainability is a what you call medium to long term agenda for us, and it's costing us money. As I mentioned, most of our CapEx is really very much towards sustainability. At the moment, this is our performance in the 9 months. And at the moment, we have 1.2 million carbon credits certified by the TPI certification body here in Thailand. And we also have 1.45 million IREC, renewable energy credits, which has a market mostly in Europe. These 2 assets, we call it assets, does not generate any cash for us because our carbon market is not yet open. And this is the balance in the 2022, right? And you can see that by the end of 9 months, we had an additional TPI certification, which is 1.5 million now. So this is what we are doing. For whatever carbon credit that we manage to squeeze out of our operation, we have them certified by the local agency so that when the carbon market opens, we would be ready to participate in trading the carbon. This is our how we would like to approach our net zero program. And this is the TPIPL. When we convert our coal-fired power plant, our consumption of MSW will go up to 17,000 per day, and that's equivalent to 12 million tons of carbon. Is 17,000 per day a big amount that we could run into a shortage of MSW? The answer is no, because the country itself produces over 70,000 per day. So this is how we would be. Right now we are 240, and this is a bit lower now. This is the picture at the moment. And then by 2026, we would be 538 megawatts from 440 and zero carbon, zero coal. These are just benchmarks to show you like what would be the price of the hidden asset if the market opens for us. Okay, why do we do this thing, participating in assessment of excellence award? Because our ESG program is really not recognized anywhere. You cannot find the value of the achievements we have in our balance sheet or in our financials. So we are just trying to tell our investors that we are working very hard to make sure that if and when the carbon market is ready, we have a strong backup and evidence that we are fulfilling our contracted commitments as far as ESG and sustainability is concerned. So this is our R&D. We launched the green cement and building products in June, and this is how we will achieve the lower CO2 emission in the building material division. And these are the other things that we are working on. Apart from reducing the clinker content on our cement, we also are doing other things at the margin. For example, our quarry, limestone quarry, is connected to our cement plant by a conveyor belt. This is one of the 3 in Asia that can do this kind of thing. And what happens is that we reduce the dust because the number of trucks carrying the limestone to the plant is less, and we save something like 3 million liters of diesel per year because of this connecting conveyor belt. And also, we do not use any power to run our conveyor because we utilize the energy that is generated by the rolling of big stones from the top of our concession mine down into the down to the slope. So this is literally a standalone, and it offers savings and also reduce our dust. We have modified our clinker. I mentioned earlier. We will now use 25% of the fuel we need in clinker. We'll now switch to MSW, and this MSW is pre-processed by our subsidiary TPI POLENE Power. This is also, when you bring the limestone from the mine to the plant, the sizes are different, and some of them you cannot use immediately, so it goes back to the environment as like stones and waste. Now we install this what we call CDE plant, which will reprocess this and then reduce the granular sizes of our limestone and then pump it back into our cement. So our dispersal of limestone that we cannot use into cement production is much lower now. And we also save on this one. Yes, we are converting our dump trucks into EV. And next in the program, we will convert our logistics trucks into EV. Okay, this is the green cement now. We need it to be certified by the TGO that it is indeed green and it can save carbon. And this certification is renewed at a regular interval. So it's not a certification that you can have forever in perpetuity. Okay, one last thing, because investors are concerned about this, there is a pending case for us saying that we violated the concession contract and generate some environmental impact in our mining activity. And the ministry that filed the case is Ministry of Industry on an environmental concern. But anyway, we are now in the court process, and it is at the Supreme Court. And if we lose the case, there are 2 options for us. One is to pay the fine, which is calculated at 6.3 billion baht, or return the rocks to the part of the concession area where they said that is a violation. So if this fine is the option that we choose, this will cost us 34 cents, whereas our book value is 3.39 at the end of 3rd quarter, and our share price is just 1.4. But based on internal discussion, we are likely to go for this the physical resolution of the case because it looks cheaper than 6.3 billion. So all in all, internally, we do not consider this case as actually, it will reduce our book value, yes, if we have to pay the fine, and even if we have to pay for the restoration of the limestone into the area, but it would not be significant in our view.
The section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day. ขอบคุณคุณมาเรียค่ะ
Thank you for joining. Bye.